The gold price is heading back towards all-time highs. And if those levels get broken, it's gonna be on.
It's on like Donkey Kong.
So is the gold price mega boom only just getting started? I'm Biko Konstantinos, and that's what we're gonna talk about today. Gold. It's just so shiny. So shiny. But can it make us big bucks as an investment? I know one thing that I think would be a great investment: subscribing to my channel. Where else can you find quality information from an entertaining and good-looking Aussie? Alright, so I may not be entertaining. Hit that like button and let's consider this gold mega boom and how we can profit. Since these lows hit in September and October 2022, gold has risen a whopping 17%. So after this triple bottom here, the price has pretty much been going straight up with only some small declines in between. So since November 2022, demand for gold's come back in a massive way. If we compare gold to the S&P 500, since November, the gold price has pretty much gone straight up, while the S&P has only gone slide up or sort of consolidated. And if we add in the Nasdaq, that's been even weaker. So gold as an investment has provided some of the best returns over the past few months. But is this just a temporary rally, like a shooting star, quick to fade? Or could gold continue to outperform other investments over many years to come? In other words, mega boom. Let's consider. Looking at the past couple of years, we can see after the initial COVID dip, gold surged massively to new all-time highs, but then dropped and consolidated. Now, if you remember, 2021 was that period after COVID where assets were artificially inflated because governments and central banks printed so much money and pumped that into economies. That's when we saw a housing bubble, stock market bubble, and crypto craziness. So during that period, gold didn't do very much. But then in 2022, artificially inflated assets came off the boil and gold had another test of all-time highs around 2070. But they failed again as the Fed and other central banks started hiking interest rates super aggressively because they got caught out with soaring inflation. So that made the US dollar surge and gold fall again. Now there was previous resistance around this 1700 level, but gold fell below that to the low 1600s. And at that stage, it felt like gold could collapse. But gold formed a bottom at the low 1600s and quickly surged back above this support at 1700. So I'm calling this here a bear trap because from a chart perspective, when this support period was broken to the downside, the gold price looked weak and looked like it could keep collapsing. However, because it could quickly regain that support, the bears who might have taken short positions around here are trapped, and as the price surges, they have to buy back their short positions at a loss. So that is very positive for gold. Now let's check out some moving averages. This blue line is the 200-day exponential moving average, and it's a longer term moving average, so it's slower to move but catches the longer trends. Whereas the white line is the 50-day moving average, which more closely aligns to the current price action. Now crossovers of these two moving averages can lead to very significant moves. However, they don't work as well in periods of consolidation. So when the price is consolidating and moving up and down, you might have some crossovers, but they don't really mean as much. But when prices are moving strongly in either direction, a crossover can mean a great deal. After this second attempt at the all-time high failed, the price fell sharply and so did the 50-day moving average, and it crossed below the 200-day moving average. And that's what we call a death cross. So a death cross can lead to significant downward movements, which is what we saw here when the gold price fell to the low 1600s. But since gold has rallied so sharply, we've now seen the 50-day moving average cross above the 200-day moving average. And that's called a golden cross. So when these crossovers occur, you never know if it's going to lead to another period of consolidation or if it's going to lead to a massive move. But combined with other factors, this is another very positive sign for gold. gold. Now looking at the weekly chart, we can see that the current price for gold around 1900 US is extremely important because from 2008 the gold price saw an unbelievable rally which took it from around 700 US all the way up to 1900 US in 2011. But after that there was about 5 years of declining prices before a bottom was found, and then another 5 years before gold could test that previous high, shortly break above it before dropping below again. And after that initial breakout, we saw another test that failed, then another breakout that saw resistance at the previous high, but then dropped back below 1900. And guess what? We're sitting right at 1900 again. So we're currently trading at the massive high seen in 2011. But looking back a bit, look how low gold was in the 2000s. It was trading around 300 US. Now this parabolic move is a thing of beauty. It starts off slow, but then it really starts to sharpen to a crescendo. Now if we travel back to the 1970s, which was a period of stagflation, like many are predicting we're heading into now, we saw another parabolic move in gold, taking it from US 100 all the way to the high 800s. So I think it's important to look at these historical charts just to see what gold can do when demand goes through the roof. Now in both of these massive parabolic moves, the gold price went up around 7 or 8 times. So if we took the 2016 low of around about 1000, a parabolic move of 7 to 8 times would take the gold price to around 7,000 or 8,000 US, which is all the way up here, which is a very, very, very long way. But as you've seen in the historical charts, not out of the question. But let's not get ahead of ourselves. That was just to give us a view of the potential of major moves. So if we are going to see a massive move in gold, there's two very strong resistance levels that will need to be broken. First is this 1900 level, which is significant because it repelled prices here, but is also the previous all-time high seen over a decade ago. So if 1900 was successfully broken, we would look for the gold price to retest all-time highs around 2070. But guess what? You don't normally see breakouts above resistance levels just occur straight away. They're called resistance levels for a reason. Quite often, you'll test this resistance level but get pushed down, and that can sometimes push the price down significantly before another retest later in the future. But when the demand's very strong, you might just hang around this resistance level for a period quite close before another test and a potential breakout. So the level of buying demand will be the most important factor as to if those resistance levels can be successfully broken. And what you often see with successful breakouts is a move above, a fall back to that resistance line, but now that resistance line has become a support level. So it acts as support as the price comes down and rebounds off that support towards new highs. So from here, it's impossible to tell exactly what will happen with the gold price, but I do expect another retest of these all-time highs to occur sometime in 2023. And if we do get a genuine breakout above all-time highs, that's when I believe massive demand will come in for gold, which could see another parabolic move of historical proportion. In other words, mega boom. If we are gonna see a massive move in gold, we gotta profit, baby. You feeling me? Now you could wait for a breakout above all-time highs and then start investing here. And if there was a ginormous move, you could do very well. But investing early before a major move can lead to the very best returns. So I'm talking about these positions here. You're investing early in anticipation of a big move. Sure, it may not be for the faint-hearted, but catching some of those big moves is one of the most exciting things about investing, in my opinion. So how can we invest in gold? We could buy physical gold in the forms of coins or bars, and you can hold those yourself or have them held for you at somewhere like the Perth Mint. You can buy the gold price via futures or maybe contracts for difference. And that way, if the gold price goes up, then your initial investment makes a profit. And lastly, you can buy gold explorers and gold miners that are listed on the stock exchange. Because if you're expecting the gold price to soar, then quality gold stocks should do extremely well due to the increased demand caused by a soaring gold price. So you could buy individual stocks, or you could buy a basket of stocks in an exchange traded fund like the Vanguard Gold Miners ETF. So gold's been rallying, but that doesn't guarantee a mega boom. But personally, I'm happy to take the risk and get on board the gold train and see where it takes us. I'm Biko Konstantinos.